Some fresh trade developments between the world's two largest economies as China attempts to address one of the sticking points in trade talks with the U.S. Beijing now says it will raise penalties on violations of intellectual property rights and aim to reduce violations by 2022. The guidelines will lower thresholds for criminal punishments for those who steal IP, but Beijing didn't elaborate on the specifics. Joining us is Kim Catechis. He is head of strategy of Legg Mason's Martin Currie affiliate. Kim, great to have you on today. How big of an olive branch is this when you consider that it is presented alongside a reported demand on the Chinese side to roll back on all the tariffs as well?
Yeah, thank you for having me, first of all. So it is clearly an olive branch. I think where we are in the trade war is where we should not expect any deal that gets signed on the back of this as being the final deal. We should not expect a happy ending, frankly, because I think structurally both countries are now embarked on a confrontational approach, and that's not going to change. I think the best thing we can hope for here is the Chinese are looking for a way to give the Trump administration face, to give them an exit, an off-ramp that shows that they've won something, which is especially important given that this is an election year coming up. So far, I don't believe we've really achieved anything, whatever your standpoint was on the trade war. And there are no off-ramps. So what this represents is the offer of a face-saving off-ramp. I think the mini deal that will come, the best outcome I think we can hope for is one where they go back to buying around about $15 billion a year of soybean, for example, and some of the tariffs that have been put on over the last 2 years start to get rolled back. But let's not be under any illusions. I don't think this is the end game, and I don't think that there's any likelihood that that materializes anytime soon.
So if in fact this is a Chinese push to try and allow the U.S. to save face, is that going to be enough for D.C., you think?
Look, I guess you'd have to ask the guys in the big White House there, but myself, I don't believe it is, because I think, unfortunately, this approach would seem to me, an outsider who's a foreigner at that, it would seem to me to have brought us to a point where there is no off-ramp. It's not easy to say you've won the trade war because you haven't got anything to show for it, and it's not easy to say you've brought China to their knees because, again, there's not much evidence of that either. So I think we need some kind of resolution, some kind of pause so that the election can be run. And I think this is the best possible outcome from the position that we're in, which is, I have to say, suboptimal.
Kim, we're now, more than a year and a half well into this trade fight that began between the U.S. and China. There's a lot of other things aside from trade that have kind of muddled the discussions. One being the issue of Hong Kong. We, of course, saw that big election over the weekend, a landslide win for the pro-democracy front. How do you see this issue complicating the discussions? And I wonder if you look at how the market has responded to every positive trade headline, do you get the sense that maybe investors are getting a bit complacent about all the other factors that could really result in more tension between the U.S. and Chinese?
You know, Kiko, I think you raise a really good point there. I personally think that investors are getting very complacent about two things. One of them, the issues that you're pointing out, and I'll come back to in a second. And the other one is they seem to be treating the trade war like some kind of storm. You know, you get a warning, the storm's coming, the storm's here for 3-4 days, whatever, a week, and then it moves on and everything's fine. We're not going to go back to the world that we had pre-2015 when, every supply chain or value chain, as we call it, in the world, was honed and optimized for cost, reliability, quality control, and all the rest of it. Because now we've injected politics in it, and that's not something that's easy to quantify. So we're not going back to that perfect world. Corporate profitability has been undermined, and it will continue to be undermined on a structural basis for the foreseeable future. But the things that you're alluding to here, bringing up the kind of what you'd call peripherals, but geopolitically speaking, are really big elephants in the room. Those are inconveniences without a doubt. Now, China would like to stick to just discussing trade, but in the same way as the circle of advisors around the US president would appear to have shrunk, and there would appear, at least from an outsider's perspective, to include less people willing to argue against the line. The same thing's been happening in Beijing, because at every step of escalation, those in Beijing who were arguing for a softer approach or less confrontational retaliation have basically been sidelined because their approach would not have borne fruit. So you're now getting to hardcore people on both sides. They would rather just discuss trade, but in Beijing, because of that hollowing out of the difference of voices, they're now convinced that this is not about trade. This is about China growing in importance and the US not liking it. So they have taken a different approach to this. So Hong Kong is an inconvenience to them, but they're not, I don't believe they're ready to go in and send in the troops or anything. I think they're just going to let it fester on the sidelines. And economically speaking, Hong Kong is so much less important to China today than it was at any point in its history.
So Kim, very quickly, from a strategy standpoint, I mean, what you're saying seems to suggest a long road ahead between these two countries and a bumpy road at that. What does that mean from a strategic standpoint? You're an investor in the market. Do you stick to some of the more domestic plays, knowing that any exposure to China is still going to be lead to more volatility?
Yeah, look, I mean, I think what you try and do is you get yourself out of the way of the runaway train. You get off those tracks. So fortunately, China's position is that there's nothing they make for export to the US that they can't export anywhere else. So they're growing their trade with other countries. They have a number of avenues to do that. One of them is the big trade deal called RCEP, which encompasses around about 40% of global trade as we speak today. The other one is the Belt and Road Initiative, which has narrowed journey times down between China and Europe to 17 days from 8 weeks that it would have been before. And other things that are going on at the same time is that Asia itself is home to the biggest growth in middle-income population in the world, and probably what we've ever seen. So 1.3 billion people are going to join middle-income groups in Asia in the next 10 years. And that's according to the Brookings Institute. So, if you're the CEO of Alibaba, you really couldn't care less what's going on in the trade war, because it doesn't affect you at all.
Okay, Kim Catechis, good to get your insight today. I appreciate you joining us.
Hey investors, Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.